Hey everybody, Jeff Garber, mortgage expert. Welcome to Tuesday's Loan Lowdown, where each Tuesday I'm going to bring to you a brief product description of a loan that's outside the box, meaning it's not a conventional FHA, VA, or USDA. And these are loan programs that we offer. I'd like to cover the Investor Cash Flow Program today, designed for real estate investors, also known as a DSCR loan. That stands for Debt Service Coverage Ratio, which is basically just a fancy way of saying that the loan is underwritten like a commercial loan, but you get terms of a conventional loan, i.e. a 30-year fixed. And this is a really, really great product. So let's go over it. So some of the benefits are, number one, there is no debt to income ratio for this product. Number two, there's no income documentation required because, again, we're underwriting it commercially, so we're looking at rental income to see if the loan actually makes sense. Also, guidelines are outside of agency limits, so you don't have to have a certain amount of properties financed, meaning you could have more than 10 and still be able to do this loan. And what a lot of people really like is we can close in an entity like an LLC or a corporation, which you cannot do on a conventional loan. Let me give you a couple more highlights and get myself out of the way here. So I'm just going to go through these quickly, but basically 80% is the maximum loan to value, so you need 20% down. We go down to a 620 credit score, loan amounts up to $2.5 million, and as I said, no limit on the number of financed properties. And when we talk about debt service coverage ratio, which is how we underwrite the loan, depending on what that rental income is to the total monthly mortgage payment, it's going to have an effect on what you need to put down. For example, loan to value, if you're putting 30% down and you have a 700 credit score or higher, then we'll actually use a 0.75 debt service, which actually means that your mortgage payment could be a little higher than the rental income and we can still do the loan. Now, if you have a 699 credit score or lower, we're going to need the mortgage payment and rental income to at least be equal, or the rental income needs to be higher. If your loan to value is above 70% up to 75%, so basically 25% down, and you have a 700 score or higher, we'll allow a 0.75 debt service. And if you have a 699 credit score or lower, and or it's a refinance, it would be a 1% debt service. And then loan to value is above 75%. So if you want to put 20% down, say, then the debt service needs to be 1. And I know that can be a little bit confusing, but that is really how we underwrite the loan. We look at the rental income. So if you have a $2,000 a month rental income and your mortgage payment is $1,700, well, the $2,000 is higher than the $1,700 payment, so your debt service would be over 1. If we flip the scenario and you have a $2,000 monthly payment, but the rental income is $1,700, you'd be a little bit below the 1 on the debt service, which doesn't mean that you're out. We still have options to do that. So to highlight the loan again, no income, can close in an LLC, great for investors, 1 to 4 units, minimum of 20% down, and it is a phenomenal program. If you have any questions, please reach out. Love to assist you. Love to answer any questions. Have a great day.